captains of industries, leaders of communities, and honored guests. Good morning once again to one and all. Before I start with the presentation, I would like to thank the KZN International Business Association for providing us all with the opportunity, not only as a presentation, but a gathering of leaders and vital shareholders, not only in the economic hub. In my presentation today, I'll be briefly looking at the tax effects of the 2025 budget that was addressed. Note, this is a brief presentation. However, I will highlight certain key aspects which I feel would be most beneficial to us all. Firstly, before we get into the numerical tax aspects of the budget, it's imperative that we also understand and acknowledge that in order for us to be a thriving and successful nation and society, we need to understand and accept that the collection of tax is a vital cog in the stability and maintaining of any society. Thus, as citizens, we have to abide and resolve to ensure that we are a tax-compliant society. Just as how a budget represents how a government responds to its society's aspirations, so too we need to aspire in reaching a state of tax compliance. This hand-in-hand relationship is a pivotal driving force in not only growing our economy, but also brings a sense of unity as we all work and strive together for the greater good of our country. The importance of a cohesive and transparent tax collection system is the ultimate goal. However, in the same breath, the manner and nature of the utilization of these funds is equally, if not greater, in importance. As we go through the respective highlights of the budget, we will hope to shed more light to get a better understanding of where we currently are and where we are heading to from a tax perspective. I'd just like to point out that tax has been there from the dawn of time. Tax must never be seen as a burden, but a necessity. Nobody likes to pay tax, but tax collection is extremely important in being able to sustain, and not only sustain, but uplift any society or any community. As I said, tax has been here from the beginning of time, and it will be there right up until the end. So it's very important for us to understand we may not like any increases, but tax is there and tax will stay. Born free, tax to death. No. Tax even after death. So, in the midst of some tough and unpredictable times in the financial world, combined with an ongoing energy crisis, water shortages, and damages to infrastructure, and a currency fighting in a tough market, the 2025 budget speech had to be a balancing act that bridges short-term needs with long-term sustainability. Not forgetting that the speech was the first to be done in South Africa with the GNU. It's safe to say that the Honourable Minister had to put his best foot forward, but with extreme subtlety. So getting back to the Minister and having to put his best foot forward. So we were all set and eagerly awaiting for the Minister to present the speech on the 19th of February. And then we were presented with the news that the first time in 30 years of a democratic South Africa, the budget speech would be postponed. I think that caption shouldn't say postponed, but I'll be truly South African and say maybe it should have said ish. First time in 30 years. There are a lot of individuals here who were former politicians, and I think they were surprised as well. I was really surprised. I thought the breakfast was going to be in February, and now the Minister decided to move it during Ramadan. So, nonetheless, it was postponed, and the reason for the postponement is that the GNU flexed its muscle and stood firm, postponing the budget speech as they could not come into an agreement on the impending 2% increase on the VAT rate, which would basically take the VAT rate to 17%. Now, I know that Jennifer and Mr. Singh basically took half of my speech away as they pointed that out, but I think citizens were in shock. More on the VAT increase than the postponement. Because in all honesty, in the financial sector, there wasn't any rumor about a VAT increase. Actually, it was supposed to be quite a quiet budget speech. And it only leaked out the day before. I think it was the Sunday Times or somebody of that sort who basically came and spoke about the 2% VAT increase. So we need to look at certain events that occurred in the weeks leading up to the budget speech that could have caused the sudden shift. They say when the US sneezes, the entire world catches a cold. In addition, the US has a familiar sheriff, or should I say reality star, who has a habit of making decisions and actions that seem to benefit mostly himself and his close confidants. Maybe his brazen and bravado actions are due to his reality star status, which is all about him getting the attention at being at the forefront of his shock value tactics. Nonetheless, Mr. Trump is now in charge, and his comments directed to South Africa in terms of pulling the plug on funding definitely triggered panic buttons within the confines of Luthuli House. This panic button could have caused a knee-jerk reaction with an increase to VAT seen as a viable option. I must point out that this is not the only reason for the increase, but I'm sure that it was a major contributor. As mentioned earlier, the sound of an increase in VAT shocked South Africans more than the postponement. But let's look at some of the factors with an open mind. It is often stated that a coin has two sides, but actually it has three. So in this narrative, we have to look at all of the sides. The first side is that the minister needed to have foresight, and anticipating that the threats posed by the US could come into fruition, he must be commended in trying to fill that gap beforehand, instead of having to wait until it happens and then scurrying around with no room to maneuver. It's just as if you were traveling on a journey. You need to check if there is a spare tire. You cannot get stuck and then look for the tire. So, in all honesty, the minister has to be commended in having the foresight and in trying to instill a measure that could possibly fill that gap. The other side, as Jennifer pointed out, is that the effect of an increase in VAT would affect us all. VAT is consumption-based, and it affects citizens from across all spectrums of society. Everybody is affected, and the 2% increase at this particular time would have severely affected and hurt millions of citizens, which would have created further unrest. We in KZN have first-hand accounts of instability and what it can do and what it can destroy. The third side is that it's known that various factors have created a situation whereby South Africa has a huge debt bill. As such, revenue is needed to serve this debt. However, the debt has been created largely due to mismanagement, corruption, as well as overinflated wage bill. The minister needs to acknowledge that instead of continuously being revenue-driven, another way to increase profit is by reducing expenditure. The spend by government on wasteful and fruitless expenditure must be stopped, and management must be dealt with. Mismanagement must be dealt with. It was disappointing that the minister did not emphasize and focus on this way to reduce expenditure instead of simply raising taxes. I think what you'll see after we get to the end of this unpacking or unbundling of this budget, the key word is revenue. SARS, South African Revenue Services. For Mr. Singh, it's South African Refund Services. That's because I do his tax return. But no, jokes aside, it is basically revenue driven. And it's quite unfortunate because as businessmen and businesswomen here, you would know there are other ways to basically make a profit. Government needs to seriously look at the expenditure, and they need to be practical and realistic in whatever they are doing. It's not simply a case of just simply raising taxes. Taking all of this into consideration, though, it must be noted that the minister actually confirmed the increase with the GNU on the 4th of February. The 4th of February. He didn't advise them the day of the budget. He advised them on the 4th of February. Yet, everybody decided to raise the matter on the day. In my eyes, there's no heroes. The postponement actually has done more damage than saving anything. And I will show you from a numerical aspect as well. But what we need to understand is that the impact created unnecessary panic in both local and international markets. It basically shows signs of instability in South Africa, lack of confidence, which ultimately leads to the loss of foreign investment. One act basically leads to lasting impressions. And that is why it's important for us to understand lasting impressions will always be there. It's like words and action. I could say something, I could say that I love you. But if I did something that hurt you, you'd remember that more compared to the words that I say. So the actions of the GNU to postpone the budget speech, was it really beneficial? Will it really help us when foreign investment becomes a little bit scared to invest in a country that's unstable? I had an international client who basically asked me, tell me what's your new tax tables. I had to tell him that our budget speech got cancelled. And he asked me, is that a common thing? Because at the end of the day, we are in Africa. And as they say, TIA, this is Africa. But that's the wrong perception. This is South Africa. We don't do this. Maybe the politicians in the room will tell me whether or not this was a political game. Because at the end of the day, I think it's totally unfair that political games should not be put at the forefront when it impacts millions of citizens. Nonetheless, let's move on to the actual budget itself. Prior to the budget announcement, there were predictions relating to a tax break or relief. The minister had confirmed that in his original budget speech, there actually was going to be some tax relief for individuals. However, with the revision, it was mentioned that there would be no change on the personal income tax brackets, rebates, and medical tax credits. On face value, one would be pleased, but a significant aspect of this impact is what we term tax bracket creep. So, what is tax bracket creep? Tax bracket creep is a situation where inflation pushes income into higher tax brackets. The result is an increase in income tax, but no increase in real purchasing power. So if I can put it in a live example, an individual is sitting at the cusp of a tax bracket and thereby receives their annual increase, which I'm hoping my boss gives me as well. Receives the increase which is inflation-based. However, because the tax tables did not change, this pushes him into the next tax bracket. So on paper, he's earning more, but his net when he takes home is actually less. How does this help government? Basically, it increases their revenue. And tax bracket creep is not something that's new. Maybe last year it was something that we mentioned because, again, last year there was no change in it, but it's something that governments all across the world basically do to generate more revenue. The problem is that if there is no change, if the change was there and it was below inflation, fine, it's minimal tax bracket creep. But because there was no change in the tables at all, you have a situation where basically it's the maximum threshold. And bear in mind, apart from generating additional revenue, during this budget speech, we basically then had two impacts, being VAT as well as the tax bracket creep. So let's get to VAT, which Mr. Singh and Jennifer dissected completely. But finally, or maybe not finally, a consensus was always there, but a consensus was reached and VAT was to be increased by 0.5% per year over a period of 2 years. Thus, from the 1st of May 2025, the VAT rate will be 15.5%, and from the 1st of April 2026, it will increase to 16%. The minister decided, let's give something back, and he basically said there'll be an extension to the zero-rated items. These zero-rated items now include tinned and bottled vegetables, dairy liquid blends, and edible offals from animals. Before I come back to the edible offals from animals, please note that the implementation dates are extremely important because they do not run concurrently with the normal February year end. I'll touch on it later when we're talking about tax administration in terms of what you need to do in terms of your practice or your business in terms of when that change basically comes into effect. But coming back to the extension of the zero-rated items, I actually think it's a bit of a joke. If you look at those items that are there, do people really consume those items on a daily basis? Are you really trying to help the poor? Mr. Salat, I think, has left the room, but what I wanted to know from him is if he's got a tripe curry. Oh, I'm in Durban. Let me say, no. Tripe is boti. Trotters is paya. So I'm in Durban. Let me use the correct terms, Mr. Singh. But nonetheless, what I'm trying to basically say is that those items are not items that are used on a daily basis. And they are also still expensive. If the minister really wanted to give something back, why not zero rate white bread, butter, even tea bags? Majority of us grew up here eating butter bread and tea. There are a number of schools who still provide those meals. And back in the days, way back in Mr. Singh's times, not my time, butter bread and tea was something that was offered there in the mornings. So if you really want to give back, choose items that basically people eat. Mr. Salat, thank you for coming back. I was going to ask you if you've got boti on your menu, because it's now zero rated.
Okay, that's good.
Right? But hold on.
The price won't go down, huh?
Just bear in mind, Mr. Salat, you're not selling it in its raw format. So unfortunately, you still have to charge that. But nonetheless, as I said, it's a bit sad that obviously there should have been more items that could have been introduced, which would basically alleviate this increase. On the flip side to that, I also still need to understand that we are South Africans and we're also resilient. Even though the VAT rate will increase, I do know that people will spend. My colleague Leila likes shopping. The VAT increase is not going to change her shopping habits. And I'm sure a majority of the men here as well would agree that shopping habits won't change. Mr. Salat, we've got Eid coming up. I'm sure you're doing Ramadan shopping. But something that we need to also know is that the average VAT rate in developing countries is actually 19%. So truth be told is that we still hold one of the lowest VAT rates in developing countries across the globe. 16% in 2027 tax year. Could it be 18% sometime soon after that? We never know. But just bear in mind that the average rate is 19%. So as I said, the tax bracket creep and the VAT increase are the significant factors in the 2025 budget speech. If we compare the impact of the original budget to the revised, we will see that the gross tax revenue is actually almost similar. So in these two slides, on the left-hand side is the original budget that was supposed to be proposed, and on the right-hand side is the actual with the 0.5% increase, while the left has the 2% increase, as well as the tax relief for the individuals. You'd see at the bottom that the gross tax revenue after both proposals is actually not that far off. So, Minister, maybe you should have thought before you acted. Maybe you should have gone back and done your maths. Because if you went and told South Africans 0.5% VAT increase, we'd still make a noise, we South Africans, but I think we'd accept it a little bit more. And as I said, by him stating that the tax tables won't increase, people have this perception that taxes hasn't increased, so they're comfortable with it. And if they were comfortable with it, we wouldn't have this negative scenario in front of the world that South Africa is unstable, that South Africa does not know what they're doing, that South Africa does not have leaders who know what they're doing. Again, maybe it was political shenanigans, I don't know, but I think we need to think before we act. And I'm hoping maybe the former politicians here can maybe send that message through to our leaders, because what they're doing is definitely impacting and hurting millions of citizens. So there was again talk of the introduction of a wealth tax. But I think people need to understand the introduction of a wealth tax is not as simple as it seems. It's quite an intricate system because you have to look at asset values. And in all honesty, South Africa does not have the capability to introduce such a system as yet. This system has been introduced in various countries, in first world countries, and it has failed. So even though the Davis Committee keeps on mentioning things about the wealth tax, the possibilities of it actually coming into fruition is a little bit distant. Unless if the minister doesn't think and acts again. And it should be known that currently the income tax bracket is at 45%. If you were to increase or introduce any other tax bracket for individuals, you're going to end up scaring people away. The bottom line is that if you can provide the services, then you're allowed to charge and increase the relevant taxes. Back in the days during apartheid, and I know where am I commending apartheid, but the truth be told is that the government at that time did the very basics that kept everybody happy. They cut the grass. You didn't have load shedding. You had water. You were content. You were happy. You didn't know exactly how much was there in the coffers. You were comfortable. So again, to all our leaders, go back and simply do the basics. If you do the basics, it gives the general public the perception that everything is okay. But if you don't do the basics and still ask me for more, and still don't do the basics after that, what are you creating? Again, KZN experienced unrest firsthand. Still sticking with wealth tax, CGT, estate duty, and donations and dividends tax remained at the current rates, and there's no changes that were there. In terms of corporate tax, the company tax rate remains at 27%. This was expected in the bid to attract foreign investment. It must be noted that no significant changes were made or mentioned in respect of small businesses. This can be seen as an opportunity missed, as tax breaks or tax incentives directed specifically to small businesses has a potential to not only stimulate and encourage entrepreneurship, which would assist in alleviating the high levels of unemployment, but also provide a helping hand to small businesses. When I say the term small businesses, I mean it from a tax perspective. So if you classify it as a small business, you get lower tax rates. Whilst everybody was doing the introduction, first and foremost, it was so nice to hear that there are so many females involved in former male-dominated industries, whether it's the plastic bag industry, the adhesives, as well as the manufacturing. And again, so many ladies have various, I'm not going to say caps, I'm going to say accessories. But it's really truly inspirational that they're getting involved. But coming back to the small business from a tax perspective, small businesses basically qualify for lower tax rates. Small businesses are struggling with the increase in VAT, and I'm going to use again Mr. Salat's restaurant as an example, because he is in a situation whereby he is purchasing an item where it would be 0 rated, but he's having to sell it with VAT at a standard rate. He therefore has to pay the VAT back at 15.5% because he has no input claim. Cash flow is the lifeline of any business. So it would have been nice if there were incentives brought in for small businesses. The manufacturing industry, the gentleman spoke about manufacturing, I'll say jeans. I'm not going to say underwear because you wanted to show us a sample. I'm going to stick to jeans. The manufacturing industry, there could have been incentives or there could be certain things brought in to assist, possibly maybe the increase in the depreciation rate on some of the assets that are bought, maybe lower tax rates. There's so many things. And what we also need to understand that there is a huge informal business sector in South Africa. Tap into that, bring them to the tax base, entice them, throw something out there. You want to increase the tax base, you want to increase revenue, give back something and you'll get more. Do the basics. But nonetheless, moving on to tax incentives, notwithstanding the tax incentives that are available, the following are slightly adjusted. So we've got the employment tax incentive, where government proposes to maintain the current value of the employment tax incentive. However, effective from the 1st of April 2025, the formula to calculate the incentive and the eligible income bands will be adjusted. What is the employment tax incentive? Basically, it's an incentive which basically gives back to the employer for them hiring youth. It's going to come back to the lady there who pointed out to me that, or pointed out to the audience that basically part of her job was creating job opportunities for the youth. One way that maybe you could sell that is by telling employers that if you take this individual on, you'll be able to claim back a tax incentive. The tax incentive basically reduces the monthly PAYE that needs to be paid by the employer at the end of the month. Reduction in taxes to be paid can be utilized in the business. Cash flow, again, is the lifeline of every business. To the gentleman with the underwear, Stephanie came up. I know she's in the youth, but she's only 12 years old. You can't claim the employment incentive for her, right? It's not a China shop here. right? I need to be careful. The BE ladies are going to tell me that Chinese are also part of being BE. But it's for the youth, and it's something that we need to tap in. The youth is of importance for us because they are the future leaders of this country. How do you expect them to basically be successful if they're not given an opportunity to work with seniors and understand the work environment? We need to tap into this now, and we need to basically look at the future instead of complaining later on. In addition to that, there was the extension of the urban development zone incentive. The incentive is extended by 5 years to the 31st of March 2030 to address urban decay within inner cities. I know we have a whole host of real estate, can I say agents in here? And if that's the wrong terminology, my apologies. But basically this falls into your category. The urban development zone incentive is basically an incentive whereby you go in and you develop certain buildings that fall into certain areas. So moving forward, transfer duty. The monetary thresholds for transfer duty will be adjusted by a 10% to compensate for inflation. The transfer duty rate remains unchanged. So just remember that. The threshold is adjusted by 10%, but the transfer duty remains the same. Fuel levies. Jennifer explained to us her traveling for a number of years and the cost of fuel. No change to the general fuel levy. However, from the 2nd of April, the carbon fuel levy will increase by 3 cents on both petrol and diesel vehicles. So are you really saving? Carbon tax. Carbon tax increased from 190 Rand per ton to 236 Rands per ton of the carbon dioxide equivalent. And then we come to excise duties, which is the sin taxes. It was mentioned that the minister in his speech looked shaky, scared. Yeah, but normally he always jokes about having a glass or having a smoke prior to that. He didn't even mention this. Maybe he went out for a drink. I don't know. I don't know. Maybe he caught it before the VAT increase. But he didn't even mention this. It's given. It's given. We know sin taxes will always increase. Alcohol beverages increased by 6.75%, which is above inflation. And there's an increase of 6.75% also on cigars and pipe tobaccos, and 4.75% on cigarettes and other tobacco products. This also includes vaping. Hey. It's not a bad thing, guys. Maybe we need to stop smoking. You know, I heard some ums and ahs and stuff like that. You know, water is still, there's no tax on water for now. But it's worthwhile looking at that and the impact on obviously your net spend. So where does all the anticipated revenue go to? The table basically pinpoints where the budget is basically going to be spent. Now, it's nice, it's fancy, it's color-coded, and I know the minister went on and spoke about how much they'll be doing, they'll be getting more police and stuff like that. The truth to be told is, when you look at this entire scenario, it is not about where it's going to go necessarily, but will it be spent effectively and efficiently? There's no point in having an increase in numbers if nobody wants to do the work. So again, we need to ask ourselves, revenue driven, instead of looking at how to cut expenses. Talking about the allocation, Jennifer pointed this out as well, that SARS have basically received a 3.5 billion Rand cash injection. 3.5 billion. 3.5 billion for what? So basically, artificial intelligence, as well as the increase in lifestyle audits. SARS, revenue services. All of these implementations are being brought in to generate more revenue. Don't get me wrong, I started the entire presentation talking about tax compliance, yes. But what we need to know and we need to understand when it comes to artificial intelligence or any computer for that matter, any program, it will give you what you put in. Do we currently have the proper and skilled individuals to put that information in to give you the proper and correct answer? Lifestyle audits on individuals. So AI basically comes and says, and I'm going to use Mr. Singh here as an example. It's not live figures. Let me just point that out. Mr. Singh submits his tax return and declares income of X. SARS comes back to him because AI says his bank account received more than what he declared on his tax return. Now, Mr. Singh has to prove, because the onus is on the taxpayer, Mr. Singh has to prove every single deposit, on that bank statement and prove that it's not taxable. So, SARS comes and tells you it's easier, it's faster, download the app. We make life easy. There's an auto assessment. Yes, it's auto assessing what it wants, which may not be the facts. Mr. Singh now has to go back and he has to go and request, because SARS won't give you, although they've got it, he has to request the bank statements for more than 1.5 years ago, and he has to now remember and go and prove what each and every deposit was. In terms of tax law, you should be taxed on taxable income, and there are rules as to what falls into the definition of taxable income. So SARS is kicking that out, and they're basically assessing you, saying we're now going to tax you on every single deposit that came into your account. You need to prove to us why we shouldn't. So it's very important for people to understand that the 3.5 billion rand is there to basically go in and add more in terms of SARS and in terms of their surveillance. I'll give you one more scenario whereby a special task team has recently been formed consisting of SARS officials and state prosecutors. And their mandate is actually to put together a list of a number of individuals whose companies are non-tax compliant. So you will be called in as a director of a company. You will be called into court and be criminally charged for the non-submission of your company's tax return. It's actually worse if your company is not trading, because SARS will basically say it's a criminal offense that you didn't submit a return, and it's worse off that you knew it wasn't trading and you still didn't submit. This is fact. What I'm giving you is not what's to come, but there are currently a number of these cases happening, especially in the KZN area. Tax administration, in the budget, basically VAT registration, there'll be a slight change to voluntary VAT registrations, whereby SARS now will go back and basically do some site visits or inspections at the time of registrations. For guys who have trusts, it's very important for you to understand that there is an admin leg to now doing distributions from a trust. Previously, you'd go to your accountant, he does the financials, and basically you say you're distributing XYZ amount to XYZ beneficiaries. You now have to physically do an IT3 certificate, which is equivalent to an IT3 from the banks or your IRP5 certificate. But you'd have to do that for every distribution. So when you receive an extra bill, Mr. Singh, from Morar Incorporated for IT3 on trust. I'm telling you in advance. And it's something that has to be done, because if it's not done, then again you fall in the realm of being non-compliant. And being non-compliant basically means administrative penalties. Or again, like I say, it could be a criminal offense. In addition to that, beneficial ownership is extremely important. It started at CIPC and it's now filtered through to SARS. So basically, they are trying to paint or trying to put together this jigsaw puzzle whereby they can see who is the true beneficial owner of a company as well as a trust. What is a beneficial owner? We're looking here in companies for the shareholder. The shareholder is not necessarily the director. The director is involved for the day-to-day running of the business, but the shareholder is the one who actually owns the shares of the business. Please understand that. And I know the guys in the BEE realm will be fixed on that. When they say who is the shareholder, it's not necessarily the director. Estate duty and donations tax, there was a recommendation whereby it was recommended that the principle of the inter-spouse exemption and rollovers should either be withdrawn completely or subjected to a specified limit. So what that means is that if you were to donate something to your spouse, it's exempt from donations tax. But a recommendation has come in whereby they're thinking of limiting that rollover. In the very same way, in terms of estate duty, if you were to pass on, and if that asset will then be bequeathed to your spouse, there is relief. There's a rollover relief in terms of the estate duty calculation. But again, there are talks of trying to generate more revenue whilst you're alive, and obviously once you've passed on. So it's something that they're looking at for the near future. In addition, there'll be a limit on interest deductions, possibly from the 1st of January 2026. That basically means that currently you can claim interest as a deduction in a company, but they're looking at ways where they're basically going to reduce that interest deduction. And also the limitation on assessed losses. Assessed losses is something that, the limitation actually is something that's come out some time back. But I truly feel you're going to start feeling the effect of this in the current year. So in a nutshell, you cannot claim your entire assessed loss in the year that you make a profit. It's actually limited. It's limited to the greater of R1 million or a certain percentage of your taxable income, if I'm not mistaken, Roland. So be careful, because you have this huge assessed loss that's carried forward. And if you then make a profit in the current year or in the following year, only a maximum of R1 million of that loss will be there to assist. So if the difference is a profit, you're still going to pay tax. And lastly, I know I've been speaking quite long, but lastly, I think with all of the evidence of exactly what I've spoken about in terms of the changing dynamics at SARS, it's extremely important that you have a qualified tax practitioner with you. And I don't mean meeting them at the end of the year or 1.5 years later when you need a tax clearance certificate or you're getting SMSs that your tax return is outstanding. As you can see, the tax environment is constantly changing, and you need to be abreast with the relevant changes because it does impact you. As I mentioned, SARS has the right and the power to do quite a lot of things. They can obviously take monies from your bank account. They can go in and have access to your bank statements. But you also need to know that as a taxpayer, you also have rights. So you need to make sure that you have a competent and a registered tax practitioner with you. It was mentioned earlier, not the tax practitioner who says, don't worry, I'll make a plan. Maybe if he just says, don't stress, we'll make the plan legally. That's what you need to be looking at. You need to be looking at somebody who's going to come in and look at your business currently and have some foresight as to where your business is going to go so that you structure it correctly as well. Majority of businesses, it's my second year here, and it's quite interesting to hear that certain businesses have grown in terms of their portfolio. But the question I have for you is that, do you have a plan of action if something ever happens to you? You are the key men and key women of your businesses. But do you have a proper plan if something basically happens to you? Because from a tax perspective, if there's only one director in a company and all of a sudden a person passes away, remember that the bank accounts get frozen. You won't be able to trade. Your family would not be able to access any of those funds. So you need to think of having plans in place in the event of something happening anytime soon. You have a business and you're wanting to diversify. What's the best structure? Do I still trade in the one company? Do I register a new company? Do I trade in my sole capacity? It's very important for us to understand that there's always a tax effect. Lots of people I've heard are speaking about NPOs, but you need to know the tax implications of having an NPO. By it simply being an NPO or a Section 21 company does not exempt it automatically from tax. I know the lady mentioned that she would basically pass the proceeds of the book to an NPO. Good gesture, yes. Something that needs to be celebrated, yes. Would SARS see it in that same light? Maybe not. We need to basically know the rules from a tax perspective when it comes to NPOs and tax exemptions, and what is the process of establishing something like that so that we're not caught up in the net where we end up with a tax liability coming from a good gesture. The gentleman mentioned the digital space. I think it's Digital King, if I'm not mistaken, or Media King. Content creators. You know, as we're moving with time, basically there's new avenues in terms of how to generate revenue, and social media is one platform. You can be a content creator either on TikTok, YouTube, various platforms. But what's the tax effect of that? I'm sure the content creators don't think about tax. They simply think about the views. So bear in mind, the more views, I think you generate more income. So how will that income be taxed? Fair enough, you'll tell me, listen, okay, it'll be taxed in my personal capacity. So what are your expenses? Internet access? A laptop? What else? Wi-Fi, yeah? But what else? And if you are then trading in your personal capacity, you're going to fall between the bracket of 18 to 45%. So as you can see, as we get more tech savvy and as we start embracing the technological world, we also need to start embracing tax structure. So again, in conclusion, I'd like to say thank you again to Kiba for giving us this opportunity, hopefully in sharing some information. I hope that everybody takes something from this presentation and can use it worthwhile. Yes, for now, it may look all doom and gloom in terms of the necessary increases and stuff, but again, we are South Africans, we're resilient. This is just one hurdle. We've gone through something that is much more difficult, and I'm sure we'll get through this much more. We're basically going to have a Q&A session after this. Please feel free to ask Jennifer and Mr. Singh all your questions. I've spoken quite a lot. I'm fasting. Think of me. But no, thank you very much.